Hey everyone, this video I'm going over how to use long and short position boxes, which is also the red and green boxes, and then a little overview of zones and why I use zones. So let's start off with a long position. When you're going long, you are buying a currency, or you're buying a currency, or maybe even a stock. And you're expecting the price to go up, right? So your rewards would be, when the price goes up, you can take your rewards. And when the price goes down, you'll be in the red. So in this case, the long icon here, the red would be small and the green would be big. So the bottom would be small and the top would be big. So in this case, we are entering here where the green and red boxes meet. That is your entry. So let's say our entry is there, and our take profit is going to be at pretty much the bottom of this yellow zone. And the stop loss would be 10 to 15 pips below this lowest wick. So around, I believe it's around there. And make this smaller, and that is your long trade. If you double click, or if you click right click and you head over to your settings, you're going to see the precise price points of your take profit, your stop loss, and your entry. So your take profit will be at the end of the green box, your stop loss is the end of the red box, and in the middle is your entry. So your entry price, I'm not going to say it because it's right over here, your take profit, your stop loss, and the ticks is pretty much your pips. So if you take off one digit, which is, if you take off, ignore the ones place, that is a 135 pip reward. And then your stops, you're risking 31 pips on this trade, which gives us a 1 to risk reward of 4 to 4.36. Now on the short side, let's take a short. Let's take a short right over here. So on a shorts, when you're shorting something or selling something, you're expecting the price to go down. When you're expecting the price to go down, right? That would mean you get paid. So if you won't get paid if the price goes up and you're in a short. So stop loss would be above, and it would be a small stop loss. So in this case, that's why the icon shows a smaller top and a bigger bottom. So you press that, and let's see where we will enter. So we will enter, let's say we entered here, and that is our entry, and stop loss would be 10 to 15 pips about that. And then take profit would be on the bottom. So take profit, if you put your take profit at the horizontal line, which is a support, it wouldn't be hit because there's actually a zone there, which I'll get into that in a bit. So that is your short setup. Now if you double click that, you will see the exact prices, your entry price, target price, and also your stop loss. So you're risking 29 pips for a 127 pip move, which gives us again a 1 to 4 risk to reward ratio. Now on to zones. Go over here, take our so zones, let me just explain quickly what a zone is. Zone is a well, let me just explain why we use zones. So there isn't a specific price point in the market that dictates a support or resistance. That's why we use zones. So it encompasses like a range. So let me just show you. So when I look for a zone, or when I draw a zone, I look for wicks. So since this is a support zone, I'm looking for wicks going down. So we have one here. There's also one going up, which means it's a retest. So one going down, one going up, meaning there is a level in the middle. Right over here, one going down, one going up, there's a level in the middle. Also one here, and one here, one here, but I wouldn't consider that that important. And then one over here, there's also one here, but that pretty much breaks the horizontal line. So let's take our rectangle and get our zones. So we will take this I guess this matches up with this as well, so let's do that. And then we'll just take the bottom of that and we will drag it out. So right there, and it's good. Go drag it out into the future so price comes back down to retest and shoots back up. So zones are areas in the market where prices touch and bounces off of, or it uses the area as a support or a resistance or both. So in this case, it wicked off of our zone. And I just want to say that the more times a zone is retested or touched, the more times it will break, and also the more important that level is. So in this case, our take profit on this short would be better if it was on top of this support zone, and it would hit right there with like 1 or 2 pips of extra. So that is why we took profits at the bottom of this resistance, and price wicked off into our range. So both of these two scenarios are very similar to each other. That is pretty much it for zones. Also, the reason why we draw zones is because if you don't know where to place the line, which is, for example, there's one over here. There's one over here, and then there's also one over here. So your resistance breaks. However, it finds the next resistance over here and it falls. So if you wanted to draw a line over here, that's gonna make the chart a little bit more messy because prices will come back up and breach, and there's a new resistance. And now there's also a new one, and then a new one. So you will always have to. As price moves on, as time goes by, you're gonna have like 100 horizontal lines in your chart. So that's gonna make it less clean, and you won't be able to read your chart as well as compared to if you were drawing zones. So that is pretty much it for this video. If you guys have any questions about this video, you can always reach out to me on Instagram or Telegram, and any other questions, not just this video. Alright, I'll see you guys later.